Right. Welcome to Learning FX. Today we'll be talking about something that will change your trading journey forever. Right. If after watching this video and your trading does not improve, then maybe trading isn't really for you. Maybe you could try something else, like this, sincerely speaking, because this strategy I'm about to give you is good. It's something that will turn your trading journey around forever. Right? So I'll be sharing how to be a consistently profitable trader using risk management strategy. You know, there are three ways to be consistently profitable. The first way is the skill aspect. The second way is the money management. And the third way is the psychological or mental technique or mental skills. So you have to possess these three skills to be consistently profitable. So what I'll be teaching here will cover mostly the emotional and the money management aspect. It may not really cover the skill because that one is a different concept on its own. But using this, you don't even need to have so much skill. Just applying risk. This thing I'm about to teach, your trading journey will turn literally forever. You will see what it means to be consistently profitable, right? So before I go into how to do this, right, I would like you to click on the Telegram group in the description page. Just click on the Telegram group in the description page and to get our updates, our stuffs, right? We'll be posting weekly chart analysis. We'll be posting trade signals, trade setups, and you get the first-hand information of what is going on in Electron FX. And if you haven't subscribed to the channel, just click on the subscribe button to get more videos. But why the Telegram is important is because there are some information like the trade setups. We may not come to post it on our channel. So you cannot simply post the trade setup and on our Telegram link or an important information, and you can get it easily from our Telegram group. So just take out 1 minute or let's say 30 seconds to do that, right? Before continuing the video, just pause this video, then click on the Telegram group link and join the channel, then subscribe to the channel if you haven't, and then continue the video. Thank you. Now let's go straight to the topic: how to be consistently profitable by using risk management strategy. The first thing I would like to do before going properly into this strategy is to discuss how to use these tools I'll be showing you. Now, when you come to this place, you will see what we have: the long position and the short position. The long position tool is for buys, while the short position tool is for sells. So let's start with the long position tool. Now, this is what it looks like, right? Now, you can see several things on it, right? So this upper part target is your take profits, as you can see, is the target level. You can see the price level at the right? Then this part you see is called the risk reward ratio. It's telling you how much risk to reward your trade is. That means if you're risking $1 and it's in the, let's extend this a bit. So if look at how the numbers are increasing, look at this number here. It's 1:1.7.3. Let's try to make it 1.1:2, right? So this means that if I'm risking $5, I am to make $10. So that's what this tool is about. The red part is the stop loss. That is your risk. That's the stop loss. Why this whole area is the amount you have to make, and this is your target. So that's a take profit. This place you're seeing is your this place you're seeing, like this middle line in between. Look at this black line in between. This line here, this point here, the demarcation between the green and the red is your entry, and then this red part is your stop loss, the distance between your entry and your stop loss. So this demarcation is simply the entry. This red point is the distance between your entry and your stop loss, and this green area is the distance between your entry and your take profit. So your target is at the toppermost and your stop loss at the lowermost area. So now this tool helps you to know how much exactly your risk and how much you're making on a trade, right? So when you want to buy a market, you this is what you use to measure to know, okay, I want to risk $5. Is this trade, and what am I expecting from this trade, right? If it hits this particular price level, what am I expecting? Let's use Richard to illustrate it, right? Let's assume that you want to buy this market, right? Maybe somewhere around here. So you come and place your entry here, and maybe put your stop loss somewhere around there, right? So now as you can see, the risk to reward is 1.1:4.8. That means if you're risking $1, you'll be making $4.86 if price should eventually get to this price level that is shown at this green line here. You can see this green line here, 932. Your entries will be at 711, and your stop loss should be at 666. So this tool is basically used to measure your risk and your reward, right? How much you're risking, how much your reward is, and that is after your technical analysis have been done, right? So use this tool to measure that. So I wouldn't be talking much about the technical analysis aspects. So that is it for the long tool, and the short tool is still the same thing. Just click here, come to the short position, and then you click on this, still the same thing. Put says for a sell scenario, you want to sell the market, so you use this to calculate, right? So this is your entry, this line in between the red and the blue. So this is a target, you take profits. This point shows how much you're risking, how much you're to make from the trade. That means you're risking $100 on this trade. You're going to make $3,600 on it. As you're making $360 on this trade if it eventually plays out using this risk management tool. So that is imagine you're selling maybe from here. You want to sell the market from this point here, somewhere around there. You can see you enter put your stop loss above this week's. So you can see it's a 1:5 trade if it eventually hits your target, which is around 851, 804. So this is a 1:5 trade. That means if you're risking $10, you're making $55.9. So that's what the tool is basically used for, just to measure your risk and reward after your trading analysis and all of that. So I wouldn't be talking about trading analysis. I wouldn't be talking about the skill aspects for now. I'll just be going straight to the money management part. Right. Now, let's go properly into the money management part. This is where the main strategy begins. This is where the main strategy begins. And if you can apply this, you will do amazingly well in your trading. Right. So this is it. This is the mastery plan. This is the mastery plan we're about to release now. So this is it. The first step to be a consistent, profitable trader using this strategy is this. This is the mastery plan. This is the plan you are following. You can take a screenshot of this. So now, this is how to do it. The first thing, this is the Electron FX mastery plan, how to be consistently profitable, right? The first thing I would love you to do is to open a demo account. It's best to use a demo account to practice this, not to use your real account, because the goal is to be consistently profitable. So you have to develop the skill before going to use your real account, right? I would just suggest you use a demo account for this. Don't use your real account because you don't want to be learning with your real money. You want to be learning with money. Maybe if you make mistakes and you have not really mastered it, you don't really lose. But if you can master this on your demo account, then I bet you when you start using your real account, you make a lot of money, right? And you come back here to give a testimony. Now, the first thing I like to do is to open a demo account, preferably with the OCTA FX, right? Let me edit that with OCTA FX because these are brokers I have used and they are trustworthy. So just go to the description page. You will see the OCTA FX links for currency pairs and stocks and all of that. So just click on the link and open a demo account immediately. This is the plan. So open a demo account with OCTA FX and open another account with DERIV for synthetic indices. What's the difference between two of them? The currency pairs are traded 24 hours, 5 days a week. That's from I think Sunday to Friday, and it has it's affected by news, all those stuff. You should know that currency pairs are affected by news and all of that. But the synthetic indices are 24 hours, 7 days a week. It does not go on a break. It's not affected by news and all of that. So you have access to trading 24 hours, 7 days a week, right? Unlike currency pairs that goes on break, they have open sessions, close session, all of that. So you can use these two accounts to practice this so that when currency pairs are not available to trade, you use your synthetic indices, which is 24 hours, 7 available. So you use it to practice this strategy. The goal is to master this thing I'm about to teach you. So just do that. Open a demo account with After Effects for currency pairs and DERIV for synthetic indices with the link in the description. That's the first thing to do. And now the second thing I want you to do is to choose specifically 4 to 7 pairs. That means you are not trading everything, right? You want to master this thing. You want to master what I'm about to teach you, right? So you choose just 4 to 7 pairs. That means if you're in your currency pairs, you're choosing 4 to 7, and in synthetic, you're choosing about 4 to 7 only. You can choose less if you wish, right? So I would like you to write it down on a book, the only pairs that you're going to trade. Write it down, filter it with your MT5, whatever you use to trade. Then you choose just 4, 5, 6, or 7 pairs only. Don't choose more than this. Let it not be more than 7 for currency pairs. In fact, you can decide to do 4 for currency and 4 for synthetic. That is all. That's it. They do only 8 assets, so that you don't have to be monitoring everything and all of that. So you just know that all your analysis, all your lookouts will be for just these few assets. So I would suggest you just choose 4. Or if you could do 3, just 3 currency pairs, 3 for synthetic, anyhow you want it, but it should not exceed 7. It shouldn't exceed 7. So you choose 4 to 7 pairs only, not more than that, for currency pairs and synthetic indices, right? So that's the second thing to do to get this thing. And now the next thing to do is to apply a risk percentage of 5% per trade. That means on the demo account, if it's $5,000 that is there, it doesn't matter the amount. I suggest you use about $1,000 at least for this plan. So you choose a risk percentage of 5% per trade. That means if your account that you're using is, let's assume that the account is maybe let's say the account is $4,000, right? $4,000. So the account is maybe $4,000, right? So if you're risking 5% of this on a single trade, right, you're risking $200 of this. So the risk percentage is fixed regardless of the amount. That means the amount does not really matter. Just make sure that any trade you take, you're risking 5% of the trade, meaning that it will take 20 trades to blow the account, right? It will take 20 consistent losses to blow this account, right? To take 20 consistent losses to blow this account, right? So that's why I didn't choose 10%, because 10% is just 10 trades, but with 5% per trade, it will take 20 consistent losses to blow the account. So we are good to go with 5%. So that is the second thing you do. You are that is, if your balance is 5,000, you're risking 250. $250 per trade. As each trade you take, you're risking 5% of the account on a single trade, right? Now, that is the second thing to do. Now, let's go to the next step. The next step is to apply a minimum of 1:3, right? Apply a minimum of 1:3 risk-reward ratio per trade. Are you getting the flow? So I've explained how to use that tool. Like I said, where is the tool again? Let me bring it out. So let's assume this is our short position, right? So that means each trade you take, the minimum that you should be, the minimum should be 1:3. That is the minimum trade. That means if the trade is less than 1:3, you are not taking it. Remember, this is a mastery plan I'm giving you. That means each trade you take, right, it should be at least 1:3 based on your analysis. That means if you do your analysis and the market gives you a 1:2, you're not taking it. You're only targeting 1:3. And why are you doing that? Because if you are using a 1:3 approach, right? If you win one trade, you're up 15%, right? Let's do the math. Let's do the math. This is the reason I'm explaining this, so you get it. So you will get it, right? So if you win one trade, you're up 15%. If you win one trade, you're up 15%. If you win one trade, you're up 15%, right? If you win one trade, you're up 15%. Sorry, my keyboard is kind of bad, so I'm just trying to maneuver before changing it. So if you win one trade, you are up 15%. You're up 15%. So you're up 15%. So this is it. This is the secret behind it. So if you win one trade, you're up 15%. Yeah. So, and if you lose one trade, you're down by 5%. This is why 1:3 is important. So if I'm winning one trade, I'm up 15%. If I lose one trade, I'm down 5%. That means if I win two trades, right? If I win two trades, I'll be up 30%. And if I lose two, I'll be down 10%. I see the magic there. So I'll be down 10% of the accounts. I'll be down 10% of the accounts if I lose two trades. So if I lose two trades, I'll be down 10%. And if you minus this 30 minus 20%, 10%, I will still be in profit of 20%. Can you see that? Right? So I won two trades and I lost two trades. But based on the risk reward ratio of 1:3, right? At least 1:3, I will still be in profit of 20%, right? So this is the minimum. You can go for as much as 1:5, 1:6, 1:7, as much as the market gives you the opportunity. But the minimum should be 1:3, because even if you even if you're 50% profitable, that means if you lose one, win one, lose one, win one, you will still be 20% profitable, right? So as you can see, I lost two trades, 30%. I was down 10%, and I won two trades. I was now up 30%. So if you 30 minus 10, I'm up 20%. So this plan alone will enable you to manage your risk, right? To help you to grow your accounts even without winning all your trades. So that is the third step. Now, so another thing I want to add here is that always break let's say always close partials, right? You either close your partials. It's just a bonus though. You may not do this if you don't wish to, you may just take your profits. You just be taking your profit at 1:3, 1:3, 1:3, right? You can close partials or break you can close partials or break even, right? Once the price gets to 1:2, you can just take partials and break even. So That is it. You close or break even at 1:2. That means once the trade goes 1:2 in your favor, you can now close partials or break even, right? Break even means you should move your stop loss to your entry, right? That's what it means, to move your stop loss to your entry. While close partial is to close some profits, right? You know, those kind of things. But that isn't really so important. This step is not really important. It's just optional, right? So it's just to protect your trade so that a winning trade does not end up in loss. So that is why we just use it just to protect our capital, but it isn't really part of this plan. So let us just skip that for now. Let's skip that for now. So let's go back to the plan. So I've explained why you need a minimum of 1:3 out per trade. So after doing that, now the next thing is to get the account to 100% of the initial balance. That means with the 1:3 approach and a 5% per trade, all you have to do is to do this and get the account to 100%. So if you're using 1:3 only, that means you're not using anything less than anything more. You're not using 1:4, 1:5. If you're just using 1:3, right, it will take you about 7 trades to get the account to 100%. That means it take about 7 consistent wins to take you up to 100%. Let me confirm that. Let me confirm how many trades to be taking us to do that. Right? Let me use my calculator. Okay. 100% divided by 15. Right? It take you approximately 7 trades to take this account to 100%. Right? So let's do the math now. Sorry. So let's do the math. Let's assume we had a capital of $4,000, right? And we are risking 5%. 5% of this, right? 5% of this is $200 per trade. So it's $200 per trade. So this is $200 per trade, right? If you're using this approach, 5%, 5, right? So it's $200 per trade you're risking, right? And each of these you have to make. I'm trying to give you this source to make at least $600 per trade. I want you to understand this thing. Sorry. So you're risking $200 to make at least $600 per trade, which is the 1:3, right? So it will take you just approximately 7 trades. It will take you 6.6 trades to take this account to 100%. That means it will take you approximately 7 trades to take this account to 8,000, which is 100%, right? So if I'm able to do this, right, so we do this in 7 trades. So this is 7 trades, you'll be up $8,000. So now you have up $8,000, right? Remember, you would invest. This is not so perfect. You may make some losses in the process, but it doesn't matter. So we're just using an example, right? I was making $600 per trade using 1:3, and I'll be up 100% with 7 good trades. That is using 1:3. Now imagine if I was using 1:5, it would take less than 7 trades. Right, using 1:5 is about 2 or 3 trades or thereabouts, yeah, about 2 trades, yeah. If you're using 1:5, it's just 2 trades and you're up 100%. So I'm just using 1:3 to illustrate this. So if you're using 1:3, minimum of 1:3, you're taking this account to 100% with just 7 trades. And remember that there will be losses. And if there are losses, if you're using your good risk to reward, all right, you will still be profitable, even if you are losing the same number of trades you're winning. That means if you lose 2, win 2, you'll still be up 20%. So it doesn't really matter, right? So you do this for 7 trades, it's now 8,000. Then the next thing you do, I remember, see the next step here. This is the next step. So when you do this to 100%, the next thing you do is to repeat these steps at least 7 times. Or let's reduce this. 7 may be too much, right? Let's just make it 3 times so that it will not be too much, right? So let's make it 3 times, right? So let's make it 3 times. Because 7 you may really have a patience to do this for 7 times. But 7, if you can do this for 7 times, man, your mastery will be something else. Your mastery will be something else. Your mastery will be something else. So now I've taken this account to $8,000 with just 7 trades. Then I remember my steps. Remember, they said you still use those 4 to 7 pairs. You're not changing the same assets you used to do this. Then you still apply 5%. But now if you apply 5% to this, you will not be risking how much? You will not be risking what? $4,000, $400 per trade, right? 400 per trade. So I want to make, this video is already getting very long, to make, right, at least $1,200. You know the drill. Remember, it's at least 1:3, right? So you're making at least $1,200 per trade, right? Remember that all you need is just 7 trades to take this account 100%. And remember that you're using the minimum, which is 1:3. Right? So if you're using one, if you are lucky enough, or the market gives you the opportunity to make, right, to make up to 1:4, 1:5, you don't need to make 7 trades. It could be just 6, 4, 3, or whatever to give you your 100%, right? So what have I done? What have I done? What have I done? Sorry. Sorry. So remember what I was saying. If you do this, right, you're doing $400 per trade to make 1, 2, right? To make at least 1, 2. Make at least 1, 2. So this is it. You're risking $400 to per trade to make at least $1,200, right? It will take you 7 trades to take this account by 100%. And then if you take it by 100% with your 7 trades, you get the account to $1,600. It will no longer be, remember, it's 100% that you'll be taking it. So 100% of $8,000 is $1,600. Have you seen why this is good? This will help you to compound your account. So now your capital is now what? $1,600. And remember the rule, you risk 10%, 5%, sorry, per trade. That means now you'll be risking 800 to make 2,400 per trade. That is it. That is how to master this thing. So you notice that if you're using this strategy, the capital is not really important. The capital is not really important. It's the strategy that is really important. Remember that risk management is key in trading. So this is the step. Just choose 4 to 7 pairs, apply a risk percentage of 5% per trade, minimum of 1:3 RR per trade, and get the account to 100% of initial balance. Then repeat the steps at least 3 times. If you can do this thing for just 3 times, I tell you, your trading journey will change in a way that will surprise you. So that is what I want you to do. Just live life trading, especially if you're struggling. Just do this. Just choose 4 to 7 pairs, only which you will trade. That means you're not looking at setup on other assets. You're choosing only these 4 assets, or 5 or 6 or 7. All right, for currency pairs, and for synthetic indices, you just choose 4, 5, 6, 7. Do your analysis, take your 1:3, and you see how your account will grow. Like it will grow. If you can master this thing, then apply it on your real account and see the difference. Right? So this is just the strategy that you will use, and you will see that you'll be consistently profitable. Right? Now, the technical aspects, you know that you can't just be applying this without actually doing your technical analysis, right? This is just the strategy based on risk management, right? Electron FX offers you the technical aspects, right? We teach you how to trade, right? How to do your analysis. For instance, you may have a trade setup, right? Let's use Richard now. You may have a trade setup, right? Let me go somewhere. Let me delete all this for now. So let me use the tool to illustrate this. So now maybe you did your analysis and you're expecting the market to sell. Maybe you want to sell the market from somewhere around here, right? Maybe you did analysis and you expect the market to sell from here, right? Let's use our parabola tool. Maybe you are expecting the market to tap somewhere around here, and then sell down. So based on your analysis, so the market to tap somewhere around here and sell down to give you, remember the rule, at least 1:3. Should not be less than 1:3. Shouldn't be less than 1:3. Should not be less than 1:3. Shouldn't be less than 1:3. So you're doing your analysis and you're getting a 1:3 trade, right? So now, as you can see, this stop loss is actually kind of very wide. That means it will take you a long time to get a 1:3. But what Electron FX offers you is to teach you how to get the specific points to enter. That means we can teach you how to get the trade exactly where the market may turn. That means your stop loss will now be smaller. Can you see this? And you can see your risk reward ratio is now 1:6, right? Because you're not getting a precise entry, right? So instead of using a large stop loss, which is so large like this, all right, and then the markets will put you in drawdown before finally coming, and you know, you're exposing yourself to so much risk. So what we offer in our mentorship program, we teach you how to analyze the markets, how to get those good entries, that your stop loss will be as little as this, very little stop loss, and you'll be getting a huge risk reward ratio of something like 1:6 or all of that. So I would like you to take a moment. So as I was saying, I would like you to take a moment to watch this video over and over again. Start from the beginning, write it down, take screenshots, and then practice it. So this video is just to help you to learn how to be consistently profitable. So we teach how to read, how to do analysis like this, right? How to do all the analysis, the technical aspects, because you can't just apply risk management without knowing when to enter, how to do analysis and all of that. So we teach you how to trade, how to do your technical analysis, your smart money play, institution candles, demand zones, supply zones, and all of that. And most especially, we teach you how to have those little risk to reward ratio. I mean, instead of risking so big, having 1:2 and having large stop loss and being in drawdown and all of that, having emotional turmoil, will help you to know how to streamline your entry. That means you can have an entry as tight as this based on what we'll be teaching you, and then you can have as high as 1:5 on a single trade. Can you see this? Markets will just come and just activate you, maybe drag a bit, and then drop to your target. So based on what we'll be teaching you in the technical aspects, you will be able to reduce your risk and increase your reward, right? So that's what we're offering you in our mentorship program. And our mentorship program goes for only $60, just $60, and you have access to all our teachings, our live Zoom sessions, our signal channel. As the premium signal channel where we drop 3 signals, not the Telegram group. So it's a private channel where we drop the premium signals and all of that. So if you want to register for my mentorship program, just simply go to the description page and click on the link there to register for our course. It's actually very affordable, right? It's just $60, but the first 3 people to register will be giving it out for $40, right? If you're among the first 3 to register, instead of paying $60, they're going to give you out for $40 to join our mentorship community, right? So that is it for now. We'll be dropping more videos as time goes. If you like this video, just click the like, subscribe it, share to your friends, and practice these things and see the difference in your trading, right? So that will be all for now. Cheers and God bless.